I think the financial crisis of 2008, subsequent events, the cycles that have hit our regional markets have clearly shown that investors need guidance. Guidance comes in the form of understanding what investments are, how to invest, and where to invest. The biggest issue you see in this region is Kuwait, Gulf, and even the MENA region in general, is that the biggest focus of investment has been in equities and in real estate. In the space of investment, equities and real estate are an integral part, but do not form everything. So we have in our part of the world, the Gulf specifically, you have a very low tax environment. You have high disposable income, and people are used to spending that disposable income. Savings and investing in the long term has not taken traction as it has done in other regions. And the biggest challenge that the region faces is to introduce new, basically breadth and depth in the market, allowing for more opportunities for investors to basically, rather than spend or simply save in deposit form, to invest in instruments, invest in their future, in their children's future. When you have limited maybe taxation, you have limited obligations in that sense, people tend to not look at the planning as they should. However, with an inflationary environment in the world, everything is going up. Cost of, we're a net importer of goods. As a net importer of goods, what happens is that there is inflationary pressures on these goods. With time, you start to see that your wealth needs to grow to be able to get into this. So even if you talk about industries such as education and healthcare, the cost is rising. Hence, investors or consumers or the nation, nationals and expatriates living in Kuwait and the Gulf need to be able to accommodate for future higher expenditure. In addition, you have the demographic side of Kuwait and the region. You have young populations that need jobs, that need services to cater for them in terms of housing, in terms of education, healthcare. For those parts to grow, the public sector will have its part, as it has done. However, the private sector needs to increasingly have its part in that. When the private sector has an increasing role in that, it means you will have more investable type securities that are associated with those sectors growing. Well, the region has had instability for many years. Despite that instability that is seen, the geopolitical instability, you have to look at the fundamentals of the region. Number one, you've got a region that has a wealth of natural resources. You've got countries that have significant surpluses. So financially speaking, sound economies. Then you have demographical aspect. More than 50-60% of the populations are below the age of 25. That presents an opportunity of growth for businesses, an opportunity of expenditure by the government, creating basically growth opportunities that will result in attractive investment opportunities when compared to other regions. You look at the GDP growth of the region in the past years, which includes significant instability, perceived instability, you will see that the region as a bloc has had one of the highest growth rates in the world. That growth rate reflects, again, the demographics, the strong financial strength, the opportunity of businesses to develop. In a low interest rate environment, low tax rate environment, increasingly friendly doing business environment, we hope to attract foreign direct investment, along with the increased investment by private and public sector in the region. Well, at the end of the day, risk return come together. If you look at some of the returns that have been seen in the region on the equity side, for example, 2013, most GCC capital markets achieved strong double-digit returns. You have a number of benchmarks to look at, and you will see that those benchmarks in 2013 were strong. 2014 were very strong in the first half, very weak in the second half, and maybe net result is low to high single-digit growth return. You look at other sectors, so if you look at the real estate sector, for example, it's a sector that, again, has to accommodate for the demographic growth, for the business environment growth, whether on the housing side, whether on the commercial side, or basically investment residential side. Those types of real estate are achieving yields in some countries over double digits unleveraged, in other countries north of 6% unleveraged. So those present opportunities to grow. Now, those are limited based on regulations to local investors, to local or GCC investors in the Gulf. However, under fund structures, we believe that this opens the door for investors to come under managed structures that are properly regulated. So increased proper regulation, increased transparency of activity, availability of investments, combined give opportunities that are more attractive than other regions in the world.